Afternoon there, guys. This is Mr. Mystery Blues FX, Mr. Sombonyo. So, guys, we're back on the charts. We are looking at the monthly chart of Nasdaq, and right now it is 16 minutes past 4. Today, I said, you know what? Let me analyze the chart during the time like where it will be highly volatile and all that. So, and also I made sure that for the audio I use a proper mic this time because I used the laptop's one and it didn't work properly. So sorry for the first video, guys. I hope this one is better. But anyway, let's get to it. Obviously, as you can see here, there are highs, and I'm gonna mark the highs with blue. So the highs, it's gonna be buy side liquidity, obviously, that needs to be taken. So I'm gonna mark that with blue, and the sell side liquidity that needs to be taken, I'll mark that with red. Okay, so these are highs that need to be taken. As these are highs that need to be taken, we have our fair value gap here, our monthly fair value gap, monthly BESI, which is for buy side imbalance, sell side inefficiency. Then I go in there and label it, obviously. So sorry for that. So can you see how we reacted from this area? We came back in and went up. So practically, let me explain it like this. The market came here. From here, it went up. It caught a break. As it caught a break, it came into this area, the gap, the price imbalance, where we left space where price did not trade back into it, and we traded back into just a bit and went up again. And as we go down to the weekly chart, we understand that we have a smaller BESI here, where this is the weekly one, where I change the color for you real quick. Yes, put the blue, and you'll see that this is a 1 week BESI. Right, as you can see here, we turned right inside, probably at the consequent encroachment. The consequent encroachment of something is the halfway point. So we turned at the consequent encroachment, but I won't be using consequent encroachments in this second episode that much because I want to introduce them as time goes. So we entered this area and went up. This is the weekly chart, and on the weekly chart we are about to take a high. This is our first high to be taken. Then this will be our second high to be taken. So to get the picture, Jay, we are targeting these highs. Sorry for that. Yeah. Why doesn't this want to go there now? Okay. We are targeting these highs as we go up. And let's look on the left and look for an area. Okay. On the left, we have an area here, which is another fair value gap. But this is our SIBI, whereas it's right here. This is a weekly SIBI. So at this area, we will be looking to sell after our highs have been taken on the weekly chart. This is a higher time frame. Weekly SIBI. This is a higher time frame sell. When we get into this area, once we break this high right here, and get into this area, that's where we start looking for our sells. Right, you get the idea. And usually when we break a high by like 20 to 30 points. So that's how you work out where to put your entries at. But what I will advise you to do is wait for the market to break the high, then wait for a lower time frame fair value gap to form, which is like normally like a 1 minute fair value gap will form after we break a high. Then you're able to sell within that fair value gap, so that you know how to be precise and more like more profitable and like I actually let me say this. Once a high is broken and you enter without looking at the lower time frames, you might find that it's going for the resistance of the fair value gap. The resistance of the fair value gap is this top part, and not just ending after the taking out this high. And you might find that it's going there. So without looking at your lower time frames, you wouldn't know that, because you wouldn't know what's forming down there. Okay, so let's go down to the daily. Right. Oh wait, before we go down to the daily, here, right here, we're gonna look at this on a higher time frame to make it so that it makes much more sense as I go to it on the lower time frames. Here we took out a low, right? So the market went up, it came back, it ranged. Then we took out a low first from the range. As we took out a low first from the range, we are about to go take out the high of the range. After taking out the high of the range, we can go down and take out this low now, where we'll go to lower prices, because price started with the sell side. So it's going to go sell side, buy side, then sell side again. So, yeah. So what will happen is the market will break these highs, then go lower. Cool. So let's see this clearer on the daily chart. On the daily chart, right here, for example, for today, right? For today, we are focused on what will happen in this area. This fair value gap right here in this area, right? Give me a second. Let me move that right there. Yeah, we are focused on what will happen in this fair value gap right here, above this high. As soon as this high is taken, we look to find an entry somewhere here. So, for example, in this area, let me use a consequent encroachment just to show an example of how it may be used. So, cool, I find 50% of this. That's a bit high. I would use a Fibonacci, but yeah, I'm usually accurate with these things. Okay, 50% mark of this. I take it, I say, okay, this is a daily SIBI CE. CE for consequent encroachment. That's our perfect entry in this thing, where we're going to look for an entry once we break a high. The high is this one, guys, this high. Once you break this high and go into this area, we can successfully look for sales. Start looking for sales to come break this low. Because in this time frame, it's even better, where it shows you that, okay, the market has been ranging, but it broke the low first. After it broke the low, once we take highs and go lower, it'll cause us to go lower, because, as I said before, if the market starts with attacking sell side liquidity first, just know that we're going to go to buy side next, then go down lower, because it started with the sell side. If it starts with the buy side, we're going to go buy side, sell side, then attack the buy side and go higher. So at this moment, we started with the sell side, and now we are attacking the buy side to take out the liquidity above, then go lower and shoot lower. That's the whole idea of this. But here, as you can see, wait, let me make it more amazing. Okay, this is a good enough area. Let me make it more amazing. Where's This is the low of this range. As you can see, the 78% mark of a Fibonacci retracement is right at the daily consequent encroachment, which is not a coincidence, which means that we are at a very high premium. That is where sales are highly probable. So at this area, when you are looking for sales, they are highly probable to work out, and they are highly, like, it's those cells my go-to type of cells. It's the cell that if we reach it today, I will take, as long as it's before 6. You see, if I get that entry before 6, just know that I'm taking it, because it's between 5 and 6. It's within my silver bullet. So anything that happens in the next 3 minutes to 6 o'clock, those are my perfect entries. So we can see that in the daily that, okay, for example, let's say we're taking a trade here today. The main target is this low. I'm not saying it's going to happen in one day, probably a week or two. But here, we need to have, okay, let's say a 30-point stop loss. Cool. Here, one thing about this area is that, okay, guys, we look at it like this. In this area, we need to look at the lower time frames to see, like, once it breaks here, once we break the high and go into this area right here, we need to see the lower time frames, because the lower time frame will tell us whether we are stopping at that consequent encroachment or going past. But if I would put a limit in this area, the daily consequent encroachment would be the perfect entry. So to show you even on the lower time frame, let me go to 1 hour because I think it's cleaner. You see the market was ranging in this area, right? Ranging, not going anywhere. Until we took a low, now we are about to take a high. And as soon as we take a high in this area, we're going to go into this higher time frame pretty array here, where I have my entry waiting. And that's when you're going to shoot down. It's a long-term trade, right? So, okay, wait a second. What time is it? Okay, there's a few seconds left until 1:30. Until the opening bell. So, okay, let's do this. 15 minutes. 15 minutes is still ranging. I want to show an example of like a lower time frame fair value gap as the news come in and all that, to show you how it's gonna work. Because right here we are in a fair value gap because we just broke a high. Fair value, it comes back into a fair value gap, it shoots up. Let's look for something in the 1 minute chart. 1 minute chart has a volume imbalance. Okay, let's do this. Let's focus here. Okay, half bar shot up from the 5 minute fair value gap, which was here. Look, people, it's here. I wanted to use a lower time frame one, but here it is. So it just probably took out the highs and it turned and respected this area. But wait, we need to wait for it and see how it's gonna perform and not ignore that 1 minute area also. Okay, let's put that 1 minute area back. Let me change the color to show that it's 1 minute. This is interesting. Really interesting. To recap, this is a 5 minute area. This is a 1 minute area. I was initially looking for something on the 1 minute area to take a buy. So how I would take a buy in this area is like this, right? So I'll put this here. It's a tight entry, small entry, with no risk actually. With this trade, that we would target this high, for example, but since we know that we have to go into a higher time frame PDRA, we take the long term trade. Ooh, look at how it just jumped through that. You see? Hey. Violated this area. Okay. What? What? A lot is going on during this time. Okay, let's see what it respected. This area. There is the same fair value gap down here, but it's going lower. I think there's news right now, because the market is playing around. And did it just use that as it just used this as an inversion fair value gap? Yes, it did. So you expect lower prices. Okay, you know what, let me do something. Do this, right? After I do this, let me go to the 1 hour chart. Where did the market open today? Okay, the market opened here on this candle. Then where was the true open of this candle? Probably right here. Okay. We use this as an inversion fair value gap. As soon as there's obviously, you see this 5-minute fair value gap, we use this as an inversion fair value gap, but it's also a 1-minute fair value gap here, a little one. And if it violates this one also, just know that lower prices are expected. Highly lower prices are expected. Look at how it bounced off this area. Amazing. Let's just wait for it. Be patient. We don't want to take unnecessary trades, because I need to send out a signal to my signal group if I find the proper entry. I just gotta wait. But the way it performed on this area, I don't think it's still gonna pass it. So I can remove this and remove this. I'll bring that back, guys, don't worry. Okay, this is the area that we reacted from, one of the fair value gaps. Let me see something. Maybe on a higher time frame it's gonna give us something interesting. Let me go back to 15. It's passing. This is the true open of the market. No, the true open is actually down here. Which is interesting. Let's make this purple. This is the true open of the market. Did it take out the highs? Yeah, it actually did. So if you look at this thing, it's using this area. It's deflecting off these highs taken here. What's this? 4-hour chart. I think that's where it's most clear. Yeah, reflecting off these highs. This is an interesting time, eh? At this type of times I really don't recommend trading. You see, as I'm watching it right now, but I doubt this is us going down already. I really doubt. I really doubt it. I really doubt it. I really doubt it. I really, really doubt it. Not yet. Mm-mm. Mm-mm. This candle is gonna be green. That 15-minute candle is gonna be green. Did we just equal lows? Or take them out? We took out the lows. 5-minute chart. And he literally pushed off this, hey? Okay. Interesting. It took out a high first, then we came back, took out a low. Interesting. We're going up. Just know that, guys. We're going up. Lower time frame took out a high, low, then we have to go up. Just waiting for it. Waiting for it. Alright. 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 I think I found my entry. I think I found my entry point. Looking at how price is behaving as a whole, I think I found my entry point. You'd see, like, look at how many things it violated. So many things right here. It violated so many things, but it broke the low. So initially it just wanted to take the liquidity out, right? Let me see what we're dealing with here quickly. Let's say 5 minutes. This is interesting. This is really, really interesting. Because again, on the 5 minute, it bounced off the 5 minute fair value gap. But I'm looking for a 1 minute entry. This is my entry of the day, guys. This. If it goes against me here, I don't know. Like, I'm still... Because I'm looking at how the market is moving. Let's see how it performs in this area. Okay. And we are in. So, as we are in this area, guys, let me just send out a signal in my signal group. Because this is a trade that we are taking. Yo. We are highly in profits right now. Highly in profits. Because, obviously, I told y'all this is my entry of the day. And it worked out. Look at it go. Look at it go. Look at it go. Just look at that go. Delicious. Delicious. Delicious, delicious, delicious. Delicious things. Delicious things. So guys, we've come to the end of this video. I will share this trade on TikTok probably and tell you how it actually went as a whole. But please don't forget to like, share, and subscribe. Thank you for all the support, guys. And always get ready to chop with me.